Good morning, investor. Today we're going to do something a little bit different. Instead of looking at one company and looking into it in detail for 10 minutes, we're going to look at three SPACs that I think are very interesting. In the past few weeks, the markets have dropped dramatically, and SPACs in general have been hit harder than other companies, which has driven the price of some SPACs down to very attractive levels. Before we get into the video, if you like the content, please hit that like button. That lets me know if you want to see more of this type of content or not. Plus, it takes a lot of time to research these companies, so hitting that like button would help me out so much. If you're new to the channel, hit that subscribe button and bell notification so you never miss one of my videos that could potentially make you money. So first, if you don't know what a SPAC is, SPAC stands for Special Purpose Acquisition Company. It's a shell company. They have no business or assets and are designed to raise money through an IPO in order to acquire or merge with a private company. Each share is usually valued at $10, and a SPAC has up to 24 months to complete a merger. This $10 price is pretty much the share price floor up until the merger date. Once the SPAC finds a target company, there will be a shareholder vote whether or not to go ahead with the merger. Once the merger is completed, the $10 is no longer the floor and the share price can go up and down in the open market. 2020 was a huge year for SPACs. It's seen more companies go public through that method than any other previous year. In total, 248 companies went public in 2020, and so far in 2021, over 210 have gone public so far. So SPACs have been popular recently, and it's easy to see why when you look at examples such as Virgin Galactic, which at one point traded for over $50 a share. That's 5 times its $10 IPO price. Or Desktop Metal, that went public through Trine Acquisition Corporation, which during February peaked at over $30 a share. But it is by no means a guarantee the prices will go up. In recent weeks we've seen the likes of CCIV, which had peaked at over $50, but recently has crashed back into the 20s, or Hylian last year, which went public through Tortoise Acquisition, reached heights of over $50 before plummeting into the 20s, and again recently as low as the teens. Today then we're going to look at three SPACs that I think are very interesting at the moment, and have either strong teams behind them or very interesting target companies. The first SPAC we are going to look at is AJAX Acquisition Corp. AJAX was formed by Daniel Ock of Oxig Capital Management and Glenn Furman of MSD Capital. They raised $750 million by offering 75 million units at $10 each, with the purpose of acquiring a company in either one of internet software, financial technology, or consumer sectors. Although these are the main sectors that they are looking at, they have stated that they may consummate a transaction with a business in a different industry. So what sets AJAX above the many other SPACs out there is that they have a top-notch, very experienced team of sponsors and investors, and I will go through them now. The AJAX CEO is Daniel Ock, who is formerly the head of proprietary trading and co-head of US equity trading at Goldman Sachs. He currently oversees Willoughby Capital and is the co-founder and CEO of Oxig Capital Management. President and director Glenn Furman also began his career at Goldman Sachs before co-founding MSD Capital, the investment firm of Michael Dell, CEO of Dell Technology, during which time he oversaw a broad range of investments and corporate buyouts. He is the current CEO of Virtue Investment Partners. Steve Ells is the founder and former CEO of Chipotle Mexican Grill. Under his direction, the chain grew substantially. Jim McKelvey is a serial entrepreneur and philanthropist and co-founder of Square. Kevin Systrom is the former CEO and founder of Instagram, and Anne Wojcicki is founder and CEO of 23andMe. Over the past couple of months, AJAX has been rumored to be looking at a series of target companies, such as TransferWise, Clubhouse, Stripe, Chime. Within the past couple of days, reports have emerged that AJAX are in discussions with Alex Chesterman of CAZOO in the UK. If CAZOO and AJAX do a deal, it will represent the largest British company to go public through this route, although it is more probable at this time that CAZOO will list on the London Stock Exchange. A CAZOO spokesman declined to comment this weekend on talks of a merger with AJAX. However, these rumours could push the AJAX share price for the next few days or weeks. With the recent market dip and SPACs in particular dropping significantly, it has seen AJAX share price drop to its lowest point since IPO. AJAX is currently trading at $10.84. Having hit as low as $10.50 on Friday. At this point, there is minimal risk and major upside potential. Definitely a SPAC for the watch list. SPAC number 2 is CGRO. CGRO has really gone under the radar lately. This SPAC was set up back in June 2020 and in December announced their intention to merge with INNOVIZ Technologies at some stage in Q1 2021. INNOVIZ Technologies is an Israeli LiDAR company. If you don't know what LiDAR is, it's a type of light radar technology that is going to be used in autonomous driving. So every car manufacturer except Tesla that is looking into autonomous driving is going to be using LiDAR technology. INNOVIZ already has some major partners, most notably BMW. CGRO, or Collective Growth Corporation, is led by Bruce Linton. Bruce is the founder and former chairman and CEO of Canopy Growth Corporation, where he led over 31 acquisitions and $6 billion of capital raises during a very successful period. Over the past year, a number of different LiDAR companies have gone public, including Luminar Technologies, ticker LAZR, that went public through a SPAC in 2020 and had traded as high as $50 before recently dropping into the 20s. Upon the news of the merger, the share price had jumped from $12 to its highest point of $16 within a couple of weeks, and had been holding in the $13 to $14 range since. But the recent drop in share price across all SPACs has seen the price drop to its lowest point of under $10.50 on Friday. Although currently trading at roughly $11.60, I expect the price to increase pretty rapidly as we get close to the merger, which will be happening within the next few weeks. The last SPAC I'm looking at is FOLEY TRASIMENE Acquisition Corp 2. FOLEY TRASIMENE, ticker BFT, is another SPAC that is being led by legendary investor Bill Foley. Foley is currently chairman of Fidelity National Bank, Black Knight, and KN Holdings. Foley is also leading several other SPACs currently. CEO Richard Massey serves as CEO of KN Holdings and Senior Managing Director of TRASIMENE Capital Management. Foley has over 40 years of experience in business mergers and acquisitions. He has a wealth of knowledge and an amazing track record. Foley could be considered the Cristiano Ronaldo or Tom Brady of business combinations. They are planning to merge with a company, PaySafe. The transaction places an approximate value of $9 billion. PaySafe is a payment solution business. BFT had its IPO back in 2020 and had reached heights of nearly $20 back in January this year. Again, like all other SPACs, the share price has been dropping over the past few weeks, and at a point on Friday even dropped into the 13 range before closing in the 14s. At this current valuation, BFT is at a very attractive price. I hope you enjoyed the video. If you did, please drop it a like. It really helps the videos be seen by more people. One last SPAC that's worth a mention here is FOLEY TRASIMENE Acquisition Corp 1. Again, this company is headed by Bill Foley. The company is about to merge and bring public a company called Alight, although it shows PaySafe here on Google. Alight is a cloud-based provider of integrated digital human capital and business solutions with proprietary AI and business analytics. At the moment, this is trading at a rock bottom $10.20. If you are looking for SPACs to invest in, you should definitely take a look to this one too. As always guys, this is just my opinion. If you're thinking about investing into any of these companies, I encourage you to do your own research and not just take my opinion. As I say every time, I'm not a financial advisor and this is not financial advice. Only invest money that you can afford to lose, because the value of stocks can go down as well as up. So guys, thanks for watching the video. I hope you enjoyed it. What are your thoughts on the future of these SPACs, or the future of SPACs in general? Leave a comment down below. I'm interested to hear what you have to think. Again, if you enjoyed the video, please drop a like, subscribe to the channel, and let's make some money.